All right, that sounds good. It is Money Monday, and joining us now, the Oracle of Orlando, Joe Bert, answering some questions as well, talking about different issues here. What do you do with your money, Joe? We've got interest rates that, great to buy a house, but not so great to get your money.
Right.
One thing I've seen is some people are not happy with banks, and we have Michael saying basically the smart thing to do now is invest in gold and silver. You would say what?
I say that's very speculative. It's high risk, high reward, and the time to buy gold and silver was perhaps 10 years ago. It's kind of like the real estate bubble. Remember when everybody was talking about real estate, and then the bottom fell out. If you're thinking about investing in precious metals, do yourself a favor. Go Google Hunt Brothers Silver. Good lesson in buying silver and buying precious metals. Hunt Brothers Silver.
Isn't that when you often get in trouble, though, when the herd starts going a certain way and everybody talks about it?
Yeah, and the challenge that we all have is we're being bombarded by these commercials. This is a time to buy gold, it's time to buy... And those folks aren't regulated. They can promise you virtually anything. Be careful.
I want to get to Ann's comment as well. She says, coming into money from selling an asset, which is always good news, wants to know what she should do to pay down her mortgage or interest any money that way.
Well, what you want to do is look at your mortgage rate. If your mortgage rate is 5%, 4% or below, and you're able to take a tax deduction, probably not. But if you have high interest credit cards, you want to tackle that because you won't get any kind of rate of return as you would as paying off those high interest credit cards.
I got time for one more.
Sure.
Patricia asking, rate of return of CDs too low, so should I try stocks for a couple of years and sell them?
Well, you got to remember that CDs and savings are generally for immediate terms, for money that you're going to need in the next 3 to 5 years. Investing says it's for the longer term, probably the rest of your life. So don't confuse the two. Very dangerous.
And we talked before, people are saying there might be a sell-off, but you have to take that long-term view.
Investing is long-term, saving is for immediate needs. Right.
All right, some great questions. You can, of course, get on Facebook as well. Joe, appreciate some great answers there as well. You can answer those on Facebook. Much more still ahead.